Hey everyone, we got some massive news for Rivian stock investors as the company's CFO highlighted the updates in the latest quarterly performance. So I wanted to share that with you in this video and discuss what it could mean for Rivian stock investors going forward.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the Rivian CFO highlighting that they produced 13,980 vehicles and delivered 13,588, which represented nearly all of its revenue in the quarter. Now, when you're looking at Rivian, one of the key things to determine is not only the number of production and the comparison with the year ago quarter, which was relatively flat, but you also want to look at how many vehicles they delivered versus how many they produced to make sure that they're not developing an inventory problem. And that wasn't the case in this quarter. They delivered pretty much all the vehicles they produced, and there wasn't an inventory buildup. That's good news, and that's what you'd like to see going forward for Rivian. Now, total gross profit was negative 527 million, and the gross profit loss per vehicle was approximately $39,000. That's tough to absorb. That's tough to digest. The company's vehicles cost anywhere between 70 to roughly $100,000, and it's losing about $40,000 per vehicle. Now, when or if it produces larger quantities, the gross profit per vehicle will likely improve as the cost per unit will improve as it makes more units. The fixed costs will be spread out across more units. It has the capacity to produce over 200,000 units, and in the latest year, it only produced 57,000, and it's likely to produce only 57,000 again this year. So its gross margins will be under pressure as long as it's delivering so much below where it has the capacity to produce. So its profitability overall is likely to be under pressure until it gets closer to 215,000 units, which is unlikely to happen until they launch their lower priced model, which is not likely to happen until 2026. So Rivian stock investors must brace themselves for continued losses on the bottom line for at least another 2 years, 2024 and 2025, and most likely 2026 as well. The company is saying they continue to move closer to making money on every vehicle they sell. Right? They're making progress. They expect to see meaningful improvement in their gross profit during the second half of this year, and they believe they will reach positive gross profit for the fourth quarter. That would be great news for Rivian indeed. The company has told investors this target Q4 2024 for gross profit margin positive. That would be a critical milestone to hit, both because it's important to be gross profit margin positive, but also because it will give investors confidence that you can set a target and hit the target. Now, remember, gross profit margin positive is the easiest of the three critical profit margin statistics. You have gross profit margin, which is the easiest one to achieve. Then you have operating profit margin, which is the second easiest, but much more difficult than gross margin. And then you have net profit margin, which is the third and final and most important and most difficult profit margin to achieve. Gross profit margin only includes revenue minus your cost of goods sold. So it only includes one cost item. And then after that, that's where you then include your advertising, your marketing, your general and administrative, your corporate headquarters, research and development. All of those costs come after your gross margin line item. So it's a first step towards achieving profitability on the bottom line. And it's a target that Rivian must hit before it can move forward. Now, one of the ways it's going to do that is because it newly negotiated supplier components that'll drive cost reductions in their bill of materials. As it gets larger and achieves greater scale, it can renegotiate deals with suppliers, which would be willing to give Rivian better price per unit if they order more units. So in that way, Rivian can increase its profitability by negotiating lower cost of goods sold. And as it gets closer to ramping up its lower priced models, the R2 and the R3, it can continue making progress and already benefit from those plans because it's making arrangements for the supplies for those lower priced models today. It needs to prepare years in advance. And while it's preparing for those supply agreements, it can incorporate the R1 supply arrangements at a lower price because it can negotiate and say, look, we're going to buy all of these materials from you when we're doing the R2 and the R3. So give us a better deal right now for the materials we need for the R1. And it looks like they were successful, and that's why they feel confident they can hit gross profit margin positive by Q4. Now, over the next 18 months, they plan to reduce their gross inventory balance by more than 25%, providing a significant working capital benefit. Now, one of the ways they're going to do that is to order or produce only that which they have customer demand for. So they're going to make sure that they're only producing up to customer demand. They're not producing any inventory ahead of schedule or not very much inventory ahead of schedule because they don't want to use the cash to make the inventory and have that inventory sit around. They want to tightly manage that inventory cycle. And so significant steps are being taken to drive capital efficiency, and the actions are expected to extend their cash balance to fund operations through the launch of the R2 in the first half of 2026. So they have roughly enough cash available on hand to get themselves ahead into the first half of 2026, at which point, if they haven't already raised additional capital, they will need to do so. They are burning through billions and billions of dollars every year, and that is concerning to investors. They're going to make it just barely to the launch of that R2, but up until that point, they're going to need to raise more capital to, give themselves more runway, because even in the first half of 2026, they're not going to be cash flow positive. They're still going to be negative, it looks like, on the cash flow line item. And so even after that, they're going to still need more capital from investors, which is surprising considering that they've raised roughly $20 billion from investors already, and they're going to run out of that money by the first half of 2026, roughly, if they don't change something dramatically between now and then. $20 billion they've already gone through. It's so massive, these losses in these EV companies. It's staggering. So most of the work to integrate the R2 into their normal facility will happen in 2025, and therefore they'll have to shut down the plant for a few weeks next year. That's going to hamper their growth expectations in 2025. 2024, they're already expecting flat, so 57,000 units produced this year compared to 57,000 units last year. I wouldn't be surprised if even in 2025 there is zero growth and they deliver, similar 57,000. I wouldn't be surprised actually if it's lower, closer to 50,000, considering there's going to be additional competition coming online in 2025. Tesla is launching lower priced models. Tesla's Cybertruck is ramping up, and that's going to take some market share from R1T. Lucid is launching its Gravity SUV in the similar price point as Rivian's SUV. That's going to take some market share. So I wouldn't be surprised if 2025 is actually a down year for Rivian in terms of production, but I could be wrong. And then 2026 is when I suspect Rivian to have a major growth year, if indeed they launch that R2 in the first half of the year and then ramp it up towards the back half of 2026. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.